All right, we're going to kick it off. I'm going to take a minute and have you guys each introduce yourselves. So we'll do the formal start of the masterclass where we're talking about leadership in the industry. So again, I think I'll go in the same order if that's okay. AMC, could you see, just in case you can't see her name as Anna Marie, and I'm going to butcher your last name.
It is a tongue twister.
I know.
That's why AMC is so much easier.
Right. But go ahead and
Marie
introduce yourself.
Absolutely. So Marie Castiglioni, everyone calls me AMC because who doesn't love a 3-letter acronym? I am the new head of RDC Next, which is a new division at Realtor.com that we stood up earlier this year, which is really focused on reimagining the next chapter, if you will, of Realtor.com, leaning back into a lot of the relationships that we have, not only with the industry and some of the original data partners, but really trying to contemplate what does tomorrow look like for the company. And so very excited to be here. Nice to meet you all. Excited to jump in.
Thanks. And Vince?
Yep. So I'm the CEO and one of the co-founders of Local Logic. And what we do is basically try to provide data on everything outside the four walls of an asset and then build products on top of that data to help attract, engage, convert home buyers, home searchers into opportunities for agents, but also work with our partners to try to tell the story of a location and really put that front and center when marketing a property.
So I'm Thad Wong, co-founder of At Properties and also Christie's International Real Estate. Co-CEO, co-founder of At.
Okay, good. Thank you. Art?
Art Carter. I'm the CEO of California Regional Multiple Listing Service.
Okay. All right. Thank you, guys. Thank you for the formal introductions. So I think the first thing we're going to talk about a little bit is each of your backgrounds coming into the industry and, how'd you get into real estate? Did you come from outside the industry, et cetera, et cetera? So let's kind of reverse it. Art, let's start with you first. We'll go reverse order. But I think, again, just so everybody knows, we're going to set the table as to where we came from so we can talk about sort of how it differs on where we're going. So go ahead, Art.
Yeah, a little over 25 years ago, 28, I think, to be exact, I stepped into organized real estate and had no idea that that world existed. I had bought and sold homes at that time, so I kind of understood what it was to search online and see things, especially here in Southern California, in a little bit different of a way. I came into this from a financial services standpoint, having served as CEO and CFO for a couple of different organizations in the consumer goods arena, merchandising, and even worked for a company that produced Happy Meal toys for McDonald's and Carl's Jr. That was my introduction into work world, and definitely a different world that I stepped into from that.
That is, by the way, a killer line for a 2 truths and a lie. Not that you would ever need one anymore, but that would be a good one. So just note for you.
Okay.
Thad, go ahead.
So I started selling real estate in 96 and transitioned to running a brokerage in 2000, founding At Properties with Mike Golden. Stopped selling in 2003 and focused on the development of the marketing, the training and coaching, and the technology for At. And we began franchising the At Properties brand in about 2020, and then purchased the Christie's International Real Estate Global Network in 21. So now I'm primarily focused on growing and converting the Christie's brand in North America. We've got a team that works on it in Europe, and then we're doing a little bit in South America, and also continuing to develop the At Properties technology now alongside the Compass platform, working to integrate those two tech stacks and continue to develop our marketing.
Thank you. Vince?
I come from a totally different background than residential or organized real estate, I should say. So I studied finance, worked in finance, and then for a real estate developer here locally in Montreal, where we're based. But I come from a real estate family. So my grandparents on both sides were in the private equity space in real estate. So I kind of grew up in the deal making aspect of real estate and was really intrigued about that and always wanted to be part of that world. So ended up studying finance and then quickly realized that I was one amongst many with the exact same background, same perspective on deals, and ended up doing a master's in urban planning with the ambition of trying to understand cities and how that related to real estate, right? Specifically on the value side and the financial side. And through that, we saw this opportunity to leverage data and then transition from the idea of using a location data in the context of commercial real estate to saying, well, actually, there's all these consumers that are actively looking for real estate and actually trying to make these huge decisions, both financially, but also from a lifestyle perspective, and saw an opportunity to go there. So very much an outsider in the industry. But I think for us and our course as a company, that's been really productive and positive, because I think at different moments in time, we were able to be naive about what we were doing. And I think we needed that certain naivete to take on the bold challenge that we now realize. So looking back on it, I think that was a good thing. But I think a challenge for us is we had no idea what we were doing, right? And I think to some extent that's still
We'll
true.
get there. Yeah, we'll get there. I'm going to grab a hold of that thread in about 1 second. Thank you. AMC, what about you as we continue down the ilk of outside the industry?
I was gonna say, I was like, it's interesting actually. I didn't realize so many of us shared financial services backgrounds, but there's a little bit of a theme there. I think my path to real estate could be described as unconventional at best. I'd like to say it all makes sense looking back on it, but it was probably like happenstance. I think relatively speaking, I'm the new kid on the block. I've really only been in residential real estate for the last 4 years. Before that, I worked in insurance. I'm still holding on to my new card for as tightly as I can. But, I worked in insurance, online travel, consumer financial services. I have touched so many different industries. And, it was funny. It was actually during my own first time purchase. I live in New York, and so we all wait, as long as we can and delay buying a home. But we finally buckled down and caved. And it was during that process that I think I realized really just how similar real estate was to so many of the other industries that I'd been in. And in fact, if you look at the Venn diagram of where I had been, residential real estate really sat right in the middle of it. Like insurance, it's really the cyclical, structured, right, market where you have the highs of the high and the lows of the lows, but everyone ride the wave. On the other hand, this is a business that is built, with so many marketplaces and vendors who all have to cooperate together in order to reach the consumer in new and efficient ways. And so there was a lot of what I learned in travel that started to apply to this space. And then last but not least, like the consumer financial journey and the emotions and the decision making that are through every step of the process. This is the biggest financial decision people make. And so as I was comparing what we had been building and innovating on in financial services, so much of it applied here. Going through it myself, I took the leap and I have no regrets, don't look back.
Well, you're never going back. You definitely still have your newbie card. You got like maybe one more year. I don't know. Art and I can probably tell you, I think it requires at least 5 to 10. So you've got to go through a few cycles, up, down, and otherwise. So on that note, and to pull the thread of what Vince was talking about, before we go into the next question of the status of the industry and all that kind of stuff, let's talk for a second about that background and what it's brought to the way, before we go into what we think is happening in the industry, the vision, and we're not going to get into any super, details. We're going to talk macro vision. How has it affected your entry into the industry, not being from the industry? Because I do think it's different. AMC, you and I have talked about it. RDC Realtor.com's had a few CEOs from outside the industry. And I worked there when they were transitioning and watched that learning curve for a few of them, which is hard. So I don't know who wants to tackle that, but Vince, maybe we'll go to you since you started it. Maybe finish that thought of what it's like to come into this industry. I know sometimes you love us and sometimes you want to be like, why do you guys all think this way? So what's your thought on that?
Well, I'll speak from the point of view of like a startup, a tech company, right? I think we came into this and we had this singular focus on what we were trying to achieve as a company. And then quickly we realized, first off, navigating this industry is quite challenging, right? There's many different types of stakeholders. And I think understanding that, having a crash course on who are your potential customers and what do they care about and what are the value props and the pain points you can address is important. But I think there's also a huge advantage to coming in with a certain level of fresh eyes. I'm a strong believer in this concept of like parallel thinking, of basically applying innovation or applying things that are done and commonly in another industry to a new set of problems. And I think that served us really, really well here. Essentially, a lot of what we do is being done in other asset classes on a from a financial side. So if you look at alternative data sets or even quantitative investing, that's being done in the public markets for 15, 20 years now. So saying, can we apply some of those things to residential real estate to help investors? Yes, but also to help consumers and to help agents be smarter and be data driven when it comes to the recommendations or the services they offer. So a lot of what we do is not new, but it's new to this industry. And I think having a team that has a diversity of perspectives, of experiences, creates for amazing conversations, but also fosters a lot of innovation. And the last thing I'll say, and then I'll move on, is that needs to be combined with a reality check of what is actually possible and how to do it in the context of this industry. And so our solution to that was to go and hire people that have that experience, that were able to say, well, that's never going to work for XYZ reason, but also build healthy level of pushback of saying, well, we want to move the industry that way, and we think it is possible, and maybe it's going to take more than 6 months or whatever it is. So I think that's kind of how we've managed that tension, that dynamic.
Thank you. I'm going to go back to AMC before I go to a little more of the lifer side. So let's finish with the quote unquote outsiders. And we say that quite lovingly. For you, AMC, have you had a similar experience to Vince?
Yeah, it's interesting because, again, when I reflect on my career, I've made a career, if you will, of jumping industries, of taking that playbook. I've spent most of my career doing corporate strategy or digital innovation work, right? And you apply it to that playbook in different spaces. And when I came to real estate in particular, I think there's a certain level of, frankly, humility, right, that you just have to lean into when you come into a new space, broadly speaking. But what I think a lot of people underestimate, and I'm only 4 years in, and I still know I have many, many more years to go before I have my arms around it. But the fabric and the connectivity and the nuance that exist within the various ecosystems and players within real estate is not something that can be understood very quickly. You really have to have the type of personality to embrace, right, kind of the not knowing, to surround yourself with people who do know, but to also be able to productively challenge in a way that isn't threatening. At my team, I do a lot of the, but why? Have we looked at it that way? But why? But why? But why? Right? And to try to push the thinking while still being very cognizant of the understanding is a balance. And I think that's what people sometimes get wrong when they come into the industry. They have like a know-it-all perspective. You really have to come in with that sense of willingness to understand, but also the ambition to want to change and evolve.
I'll tell you a very quick, funny story before I go to Art and Thad, which is I used to walk around with the head of M&A for Dominion. Thad and Art remember at the time Dominion came in and bought, I think like 12 companies in a year. And he's like, oh, I did this with the auto industry. All industries are the same. You guys all think you're unique. And then I saw him a year later, and he did not have that opinion anymore. Thad, I think you are definitely closer to a little bit of a lifer like me and Art. I do think it is about finding that balance between innovation, and I think you said this on the prep call yesterday, MC, innovation versus disruption. And where is that balance? And how do you do that? And in a way, it's interesting for you, frankly, having come up and started at properties, but now being part of Compass, right? There's got to be a balance there in those conversations, I would have to imagine.
Yeah, I think that they're two very different companies. Our company was built organically over a course of 25 years, and it relied solely on its own profit and a smaller engineering team of 30 people. And I think there's lots of different ways you can build a company, and there's lots of end results that can happen. There is not a perfect recipe for either style. But we had very different upbringings, the two companies. Now we are in 2025 and looking to integrate the technology side of it, but still run cultures and the brands completely separately. And that part I think is important. I think that from the outside perspective, when you talk about disruption and innovation, whether it was Redfin or any of the other companies where somebody from outside the industry feels like I can solve it, I always compare it to guys that have run brokerages or other companies that all of a sudden want to be the mayor of a very large city or feel that they can be president of the United States. There's a level of arrogance that goes along with some business success that people think they can do everything. And I think this industry does a good job of humbling people because it is independent contractors, not a product, a software or a physical product, and it's based solely on relationships. But at the same time, you're trying to get adoption through your innovation, but they're not your employees. So it's a lot of things that work in construct with one another that a lot of people from outside, you said you had a friend that kind of after a year of acquiring companies was like, this is different. And we had a private equity partner for 7 years, and they said the same thing. Every industry says it's perpetually unique. And I would argue that real estate is, because there aren't a lot of industries where we have to provide leadership, relationships and culture, but we don't have employees. We have full independent contractors. Yet we have to work for that harmony between the two, and we're providing services to them where we're servicing our revenue providers. So it's complex and it's different. But I think Compass was the first one that used venture capital to acquire and change a model, which they did really quickly. And now I think they are, with the largest volume in the country, now trying to just stabilize the markets that it's in, maintain their market share. And I think they did do a good job of developing their own culture along the way. So all of us have something we can learn from one another. I don't think any of us have done everything perfectly. And if we just pay attention to our competition and to everything happening around the country, I think there are still a lot of good ideas out there. And there are a lot of people, whether independent or corporate, that are really doing their best to provide great service to agents to improve their ability to sell and the customer's experience.
Well, so common theme before Art, you and I talked about this over breakfast, was humility and humbleness. It's funny talking about that, because the truth of it is this is not an industry that's noted for its humility. um, but at the same time, it is also the strength of the industry is the boldness. But how do you balance that humility with boldness?
Piggyback on what you brought up, I jokingly say that I run the largest community of type A individuals. It, it's it has a tendency to humble you no matter what. Even if I am an A+ organization, 95% of my members love what I'm doing. That means that I've got 7,000 people out there that hate what it is that I do, and I hear from them on a regular basis. So there's no way to come at that with a level of ignorance or arrogance. So it's always that process that you go through. And I want to hear from our members. I want to hear what they're thinking. I want to hear what their concerns are. But you typically hear from the ones that are unhappiest a little bit louder than anybody else. And that definitely has a humbling effect.
All right. So on that note, we are servicing independent contractors. I think also Vince made a great point earlier, which is what's hard about this industry is there's a lot of players and the players are very intertwined. It's a bit incestuous. So to Art's point, even about the 7 versus 100,000, you're going to piss somebody off. One action is definitely going to have another action. It's near impossible. So let's pivot a little bit to what's happening in the industry today. We're seeing massive plate tectonic level shifts in the industry. You each represent a different sector of the industry. We have portal, vendor, franchise, MLS. And my question is, what do you think is happening? Is this new to the industry? Is this just another shift? Is it much ado about nothing? What is your take on all the changes and what it means? Anybody want to jump in first before I round robin it? Okay, well then we'll go to Vince because I get to pick on him as my CEO. So, what do you think, Vince? As an
I
outsider,
think my answer is going to be boring because for us, I think the reality is that we have very little influence as a vendor in these shifts, and I think our job is to understand the dynamics, but then react very quickly to that. What we're doing is we're trying to service the industry. So as the industry shifts, we need to make sure that the product we're offering is still valuable and if not, is adapted to whatever changes happen. So that's where my head's at. And I think that's what we're trying to do is to constantly innovate to be relevant. It's been interesting to watch from the sidelines, but I think that's the only thing we can do.
that's great. Actually, I like that. So, really, if we tweak this question to your point as to our role as a vendor, right? I think you're right. It is our responsibility to serve the industry as best we can. And at the end of the day, when I ping this over to AMC, I do think it's a question of, for vendors, though, sometimes for us, is that serve the consumer. So is the agent our end user because the broker's paying or the franchise is paying, right? These changes as they happen, do we focus on who pays us or do we focus on who
Well,
uses
I mean,
us?
yeah, so our play is that
I
we're a
mean,
B2B2C company, right? So we
right.
essentially provide a
How does
service to the
everybody here work?
consumer, but our customer is the business, is whoever we're selling our products to. So we have a responsibility to both. As things change, we have to make sure that that model still works. But that was a decision we took from the get-go of saying, well, we know we need to service both of these entities. And going back to the prior conversation, we have the consumers, we have our customers, but then as well as a vendor, as a tech startup, we have our employees, right? So as leadership, we're wanting to service all of those stakeholders because that's what makes the company work. And I think that's challenging because sometimes those different stakeholders aren't always aligned. And then you add the complexity of the industry and different stakeholders within that. An example, and maybe I'm going to get in trouble here. Sometimes when we're looking to market a property or the objective about a property's location characteristics, it doesn't look great. And that might be good for the consumer to know that there's this thing that might not be great about this property. It's not great for the agent, or it's not great for the broker that's paying us. So we have to kind of walk that line, knowing that our reputation's on the line and the value of our services aren't always aligned. So I think that's challenging, but it's something that, most vendors have to work with.
I think that's true. I do think it's not been easy, and we'll ping over to portals, but I do think for the vendors, not just us, but in our space, it's both exciting to have to pivot, right? And we certainly, I would argue vendors probably at least have the flexibility to pivot, but it's hard if you spend a lot of time in your roadmap and your time and your efforts and your research on catering to a certain sector.
So I'll say one last thing on this. It's funny because we were having conversations with some companies, and they were saying, this is the biggest financial investment consumers will make. And we're really thinking about home ownership and the process of buying a home as a financial decision. We want to offer more services and spend time there. And okay, great. I can align on that vision, and our products are relevant to some capacity there. And then the next day, had a meeting with another CEO, and he sees the complete opposite, saying, oh, that's bullshit. That's not true. I don't see it that way at all. And so you have to be careful how you position yourself as a company, but you also have to pick a side eventually and commit to a vision for your product offering.
Yeah, thank you. I agree. Well, pivoting and serving different masters, AMC, any thoughts on that one? I'm sure quite a lot, especially from 4 years of the industry. You're like, holy.
I think I joined at like the one extreme and have ridden it kind of down over the last 4 years. I've not seen the upturn yet, but
you will. It comes. I'm telling you, it
the nice thing, right? And I think I mentioned this, right? Cycle, when you look back, right, over long periods, right, we know this is a cyclical market. And the good thing is, right, cycles turn. The bad thing about cyclical markets is when you are in the middle of a cycle, you have no idea what the extremes are going to be, the highs or the low, how long the duration is going to be. We all wish we had that crystal ball that we could shake and say, okay, this is the year where it's finally going to turn, or we finally hit rock bottom. And so it's very hard for each of us as leaders to understand, if I'm going to innovate and invest now, when does that pay off? Because you are fighting fires on so many different fronts when you're in particularly the tougher parts of the market. Internally, what we have really tried to stay true to is not be short-sighted. Again, we know markets turn. We see signs of growth. We see those kind of green shoots, if you will. They may not be going as fast as we like. We've been saying it's about to turn for like 3 years. At some point they stop believing us. But how do we make sure that we are best positioned so that when it does turn, we are able to take an outsized share of that growth? That's ultimately success. That ultimately fuels our bets. That ultimately fuels the way that we're focusing our priorities. And that's the best, frankly, we can do, which means we've got to kind of understand not where the market has been, what has kind of gotten us to this point, but where we believe it's going. And so looking kind of a little bit further than we typically would in that like fiscal year, so many of us are kind of beholden to really understand what does the upswing look like and how can we make the most of it.
Yeah, I agree. And I'm older than you, but by far, but I've been through a few up and downs, 97, 2007. It will come around, AMC. I'm telling you, it does. I have friends who are still loan officers and agents through downturns. The truth of it is that you do have to plan for the turn, but it's that balance between doing business today and to your core business, right? It's that balance that you're finding between looking for the turn and planning for the future, but also putting your head down and serving today. So Art, for you, is that on the MLS side, and with you having also seen a couple of downturns, what's your thought on that?
In 2007, 2008, and 2009, we lost 25% of our membership. Yeah. We've already lost 15,000 agents here in Northern California that subscribe to us for services. So more than anything, I'm just a facilitator. I can't increase the transaction volumes. Thad's probably the only person on this call that really could influence that. You got to plan for it. And it just does feel a little bit different this time. Affordability is definitely an issue. Financing is definitely an issue. And, our agents and our brokerages are having a really difficult time. And those REO markets not being there, a lot of them are transitioning into property management and things that they haven't done before. So I'm here to learn as well. So I'd be curious to see what everybody else has to say about that.
I think that's a great point. The boom period was unprecedented. I really had to tell my kids that money does not fall off trees. The stock market does not only go up. Your house does not automatically gain equity. There was this period for the millennials that they could not lose, really. Um,
And since
it was
2010, we've seen a 300% increase
right.
in some of our marketplaces. Obviously, that's not sustainable, but we're still seeing market appreciation even in a down market.
Exactly. So, Thad, thoughts for you on that, and then we'll go into deeper stuff and put you on the hot
Yeah,
seat.
I think it is strange seeing a down market without price decline. And I think you're starting to see price decline in Miami and in Austin. But we've gone through this period where interest rates have caused a reduction in volume, but it has maintained and grown prices where the top of the market was really driving the entire market. And the affordability became a significant issue. So the good news about down markets is that's when innovation is at its best, and that's when adoption is at its best. So when you're trying to think your way out of problems is when you usually come up with new innovative ways of doing things. The interesting thing we have now is you had the topic du jour involves Zillow. And I thought it coming back now, brokerage would band together and say, hey, enough is enough, kind of take the last 10 years and say, we've built a company that's servicing an industry that it's now more valuable than all of the brokerages in the industry. We should probably not have it regulate our rules and regulations for the industry. We should probably not privatize that for an association. And it's interesting to see that even now it's splintered. I don't know if you guys remember Upstream and all the things like those concepts. If you went to there, it was always greed. How do I own this? Instead of people really thinking about the preservation of the industry and the independence of the industry. Usually greed stopped that from happening. And I feel like that's happening again now with the overreach on Zillow. This should be something that we're universally against, irrelevant of your opinion on how a home seller chooses to market their home. A private industry coming in and setting regulation or participation levels to our industry should be something that we all universally oppose. And it's funny because Zillow's creative about it, saying, hey, if you're against private listings, you must be pro Zillow. I feel like they should be separated. And you can have different opinions having to do with privatization of exposure, etc. But we should all be unified in that a private company, publicly traded company that uses the data of its providers to increase its value and sell back the leads to it should not be setting regulation. I mean, it should not be working with NAR. So I hope that that's something we can at least agree on, that that's probably a bad idea.
Well, I don't think we're going to agree on it, actually. And I'm not taking the bait
We
because
get so much
I'm
better
a middle-aged
participation, Audrey.
woman
Let's
with
just
three
get
grown
there.
children, and I know better. And I feel like you're going to get me in big trouble here, Thad. But
I,
I
I've
will.
had enough of the Department of Justice for a while
I
now.
know.
So yeah.
Uh, you know, you were supposed to be on the last one with James, Thad, so don't even. Okay.
Okay.
But I will pivot it a little bit. I'll take the bait the teeniest way.
Okay.
Pivot it just a touch because I can't quite resist. What does the effect of P&E companies and large publicly traded conglomerates, not just yours, but companies like CoStar and Rocket making these massive moves also have dramatic effects on the industry. So, are we all drawing a circle a little bit to meet our own needs at the end of the day? I don't condone or any of that. I have my own opinions, make no mistake about it. Happy to talk to you about it later. But I do think it's a question of, are these again tectonic shifts with regard to the ownership of the industry and players again as we come full circle of coming in from outside the industry. So it's not that you're wrong or right. It's that, is it a question of what's happening with regard to the ownership? The industry might end up being a very small number of players that own the majority of the stakeholders.
Yeah, and I think to your point before, it was very easy to put all of us in a clean bucket, perhaps. The intricacy of the relationships, the intricacy of the fabric that makes up this industry, we don't all fit nicely into all of those buckets anymore. I think consolidation and the infusion of capital that we've seen, particularly
There's the
accelerating
key
this
word,
year,
infusion of capital.
I think it's a natural response in some ways to what's been happening on the market side, right? Like margins are tighter, the environment is harder. We're all feeling the pressure. Scale is going to matter for folks to be able to weather this storm. We're looking to make those bets in the right places. The consequence of that, though, is that we are seeing more end-to-end vertically integrated ecosystems that are becoming increasingly closed. And so, whereas before we had more open marketplaces, more open models, more open ways of collaborating with each other, we're seeing other players like the Rocket, Redfin, Mr. Cooper moves, the Zillow super app moves, serving fewer and fewer in the future than they have ever in the past. Some of that is driven by how those companies came about. Some are showing their hand a bit on kind of, their strategy and values. It's a space where we are for the industry, by the industry. Our job is to connect practitioners and to serve as that open marketplace, right? We've chosen not to take actions because of that. And so I think you're going to see that shake out in the years ahead as more and more pressure builds and people are seeking more and more capital.
As we become more vertical, are we also becoming more closed? And are we going the way of like a Google or an Amazon where, remember the antitrust suits that you can get a computer, it's automatically either had Bing on it and things like that? Are we making it harder for consumers to choose? And consumers or agents or brokers? Are we just making it harder?
It could be just that I have been doing this too long, but I take a little bit of a contrarian view of all of it. I remember reading stories about Sears and Roebuck buying Coldwell Banker in the 80s. This thought process that they were going to integrate the shopping experience in between what they could bring in from Sears and Roebuck to Coldwell Banker. Obviously, innovation costs money. Everybody's talked about it being a time for innovation, and innovation costs money because a lot of what you're going to try is going to fail. And there needs to be some influx of capital into the industry to try some new things. Obviously, this industry is always ripe for change and transition. But I honestly think that, as Anna Marie was talking about, the margins are so low that unless they can successfully funnel some of that business off of the brokerage side to some sides that might have some higher margins, it's going to be a difficult road for some of these players that are bringing money into the table. And don't forget some of the PE firms bringing money into Keller Williams and things along those lines. Obviously, there's a lot of money flowing, and it's going to loosen up over the next year and a half, and we're going to see more of it.
Well, but the goals are different, right? To Thad's point, I think what we're seeing is an amplification of different goals and needs. Thad, I want to make sure I give you a chance before I go to Vince and pivot to another topic, being as you guys are at the center of it. Do you want to respond to all of that?
Ask me a specific question because there was a lot there that I was
Okay.
keeping track of.
How do you account for the fact that the goals are different? You're talking a lot about privatization, but one major company, names remaining nameless in the industry, was like, oh, well, we're at the end of our 5-year PE cycle. So the thought process is they're probably going to get bought. So you see it in their decision making that they think they're at the end of the PE cycle. And this is a player that is dramatically involved in the industry. So what happens then,
Yeah, but it depends also on their leadership and who is the next buyer. Is it going to yield greater consolidation? Is the leadership going to stay on for another investor? And in a lot of things, they're just signaling we're looking for another investor. And unfortunately, they're looking for an investor at the wrong time. And so people are going to yield different conclusions there, and how money is being raised and what the outcome is. There's oftentimes different strategies, like with Rocket buying Redfin. Is Redfin going to maintain its brokerage side? Or is Rocket going to say, hey, the referrals I get from the agent population aren't going to allow me to also run a competitive brokerage alongside them? So, yeah, I think everybody learned from Zillow's integration of mortgage onto their site that the brokerage companies that owned mortgage arms as an ancillary service, albeit from a few of them, I didn't do it real well because it didn't involve technology and it involved a general loan officer and a brokerage creating a relationship. What you saw from Zillow integrating with the lead gen side of it is you saw a much faster adoption and great numbers. Not great macro numbers, but from a short launch, numbers that were at least inspiring enough for Rocket to say, hey, I better get into search. So Rocket bought a Redfin. Probably the best user experience online, if you ask me. Significantly better than Zillow or any of them. And Redfin from a user side, the UX I think is fantastic. What are they going to do with it? But I don't think necessarily all of this is bad for brokerage, whether it's a PE firm or a private wealth family that comes in and buy it. You have to have money flowing into a market, and you have to have leaderships deciding on what they want to do with that money. And usually it's focused on, if it doesn't have to be focused on preservation at high interest rates, it's focused on innovation and efficiency. And you're seeing right now in the market the shift towards more of the top producers. You're seeing the top producers around the country produce more. That is the consumer's drive towards professionalism. A top producer is a top producer for a reason. They usually have the highest customer satisfaction ranking. When there's anxiety in the market, you don't just go with your cousin to sell a house. And then how is that going to affect the brokerages, right? The top producers are on what? They're on the highest splits. If they're producing a greater percentage of the volume, that net company dollar is less, creating even greater contraction on margin. So it'll be interesting to see, what do the cap models, fee models, how do they compete against the full service models, etc. But I like these periods because, like I said before, it requires creative thinking and it requires you to do things differently to remain attractive and grow. And if you don't, then you do end up looking for exits. But the problem is a lot of people, once they went through the Great Recession, they went through the high interest rates, and they're waiting for these 5% interest rates we were supposed to get, don't you remember? And that was going to spur us back to 4 million homes sold a year, and that's when they would exit. There are a lot of brokerages out there around the country with no succession plan that thought this would be a great time to exit, and but it's really not. And so there's a lot of opportunity out there for whether it's PE, consolidation, strategic acquisition. But I do think the rest of this year, you're going to see a lot of major announcements going on, and you will see a lot of market share being exchanged from different brokerages because of consolidation.
Well, I always say that there are challenges when the market is at its peak. There's tons of inventory, there were low rates, and there's tons of money also coming in the industry because everybody thinks it's falling off trees. And you have 800 million startups, so it's hard to compete as a vendor. And then when times are tight, it's hard to compete because people don't want to spend money, right? Or they're nervous. So there's no perfect world, right? Last question for the group as we go around. And I'll start with you, Vince. As representing the vendors circuit, if you could wish one thing for this industry, and please feel free to have a completely selfish answer. Like, it would be great for us as a vendor if the industry would X.
I'll say this. When we first started 10 years ago, I had to convince brokerage owners that having a map on their site was relevant, right? Not everybody believed that. And so I think sometimes it could be said that this industry innovates a little bit slower than other industries when it comes to tech. And what I'd love to see, and as we're doing our homework, is let's look outside of residential real estate in the US to see what's being done. Like, AMC, you mentioned travel in that industry, and there's a ton of really cool stuff being done there when looking at the tech or the consumer side. Looking at what's happening within residential real estate in Europe, there's a lot of these really, really cool portals with features, functionalities, services that they offer that could be very interesting to be applied in the US. So I think sometimes, and we do this too, we tend to really focus on our very large market, but without looking for inspiration elsewhere. And I think that could be very interesting for us to move quicker when it comes to innovation and offering things that I think today are possible. We're just not looking to do that. So speed of innovation and having that desire, I think, is what I wish on the industry.
So we would get from the nice to have to have a little faster.
Interesting. I feel like one of the isms about the industry that I hear over and over and over again, in some ways it infuriates me, is that this is an industry of followers. It's not an industry of leaders, right? And it's not been my experience, frankly. Maybe I'm fortunate, right, to be around a lot of more forward-looking individuals. But I do think one of my observations is that oftentimes when change is enacted, it's out of fear. And I wish we had more leaders within the industry that were changing and driving change because they had that desire, right, to lead the change, as opposed to waiting into a place where they felt like fear was necessitating a change. Because fear can also cause inertia. And I think to what Vincent was saying, that sometimes then means that change happens more slowly. We could act more quickly if we embraced change differently and saw more of a win-win-win scenario or opportunity within the change than I see at large, right? And that's a broad generalization, but that's one of the things that as I think about innovation and the precipitation of change and where we could be, I wish more of us wanted to drive, right, that change.
Well, that's a perfect segue to Art and Thad. You get to finish. Art, you really have been actually quite at the forefront of a lot of change with what you're doing. So, anything else that you would do to make the industry a better place, or, selfishly or otherwise?
Selfishly, my wish for this industry is the same wish that I have for this country, is consensus building leadership. There's way too much leadership in silos and not enough reaching across those silos to leaders and trying to build some consensus. Because at the end of the day, we're not dealing with the issues that are really important. The home affordability, the lack of inventory, the lack of building. Those are the things that are really impacting the consumers in the United States. And we are arguing over things that may be important in the industry, but definitely aren't going to further the consumer's need for shelter.
Oh, okay. That's going to be hard to follow. But
Yeah,
it's
mine
your
is going to be completely industry related, less altruistic. But if I had one hope, it would be for NAR to implement a truth in advertising requirement that every single agent that acquires a listing and works with a seller, their name and their company is advertised alongside that listing. And I think that is a fundamental requirement for our industry that NAR should be getting behind. And I don't know how somebody can be against that aspect of it, because at the end of the day, that is our responsibility to the consumer.
okay. All right. Good. Well, let's see. Mine is incredibly flippant, which is that we would have a much better sense of which conferences that we'd have to attend, that they would coordinate their schedules, that they would continue to pick locations that are advantageous to us seasonally and not be on top of one another. So, for those of us that need to be on the road a bit, I would ask all of the conferences as a whole to sit down at the table, as Art suggested, with great leadership to our travel schedules and our mental and home health. So that is my wish, but we are out of time. Thank you. What a killer conversation. Thank you so much. So interesting. I feel like we could all continue it later, and maybe Art's dream of talking more together. So thank you for joining. I appreciate it. See you
Thank you.
next month.
Thank you.
Thanks so much, Audrey.
See you guys.